talk about commodities now. Manisha is standing by. Manisha.
Well, thank you for that. I want to start with crude oil prices because as we have started new year and most of the international players are coming back into the market, the one thing that they're buying quite strongly seems to be the crude oil prices. Well, we have seen prices gain up by a percentage point in the overnight markets. Remember, crude oil prices are also gaining because the US crude inventories have declined by 1.4 million barrels. This is going to be the third straight week that you are looking at inventories on a decline there. Also, crude oil prices did close 2024 on a weaker note, down by 3%, and 2024 was a second straight year that you saw declines come in for crude. So there is some opportunity buying as well happening. The market's also taking support from the World Bank report, which has raised a forecast for economic growth for China for 2024 and the upcoming year 2025 as well. China also has pledged to issue special treasury bonds worth a record 3 trillion yuan. That is expected to support the crude demand going forward. Markets also are looking at the EIA report, which has said that the demand growth forecast for 2024 was at 1.2 million barrels to 104.3. The markets are anticipating that you could be looking at a demand growth growing on that for 25. That is keeping the prices supportive as well. Now, when we come for 2025, well, there are a bit of a concerns, especially when it comes to supply side of it. The non-OPEC production is expected to drive 1.66 million barrels per day of our supply growth in 2025, while the demand is anticipated at 0.5 million. So that is where you have a surplus coming in. Apart from that, the OPEC and allies have continued to delay their increase in production, and that production is expected to come in the markets from April 2025. So you are looking at excess supplies for sure. And then when you look at the US markets, the production there is at near record highs. The net imports are expected to see a decline of 20%, lowest since 1971. So US is not going to need too much of Middle East crude oil either. And then the markets are looking at continued volatility from various sectors like geopolitical tensions. It also is going to be about risk tensions, US policies, Chinese demand. So there's just so much to watch out for. There's a lot of data coming into the street today as well. You have US jobless claims, Fed meeting minutes, and the US employment data. So this is the first set of economic numbers that we are seeing coming in from the international markets for 2025. And the street will definitely react to all of these numbers.
Thank you very much for that. Let's get